Welcome to Trillions. I'm Joel Weber.
And I'm Eric Balchunas.
Remember that time that ETFs, we suddenly have Bitcoin ETFs? What's the other side of that been like for you? Is it a big come down, Eric?
A little. I phased out slowly, Joel. I didn't want to go cold turkey, right? So in fact, I was telling somebody like, oh, what are the stats for day 11? And I'm like, look, I'm phasing out now. Go track this other site. I'm going to point out things that are interesting, but I'm not doing like a daily look at the race every day. These ETFs are up and running. By all measures, it was a fantastic success, although it's been a little clouded. The GBTC outflows have kind of made this an interesting launch. It's not, launch is just all volume is inflows. Here you have this unlock of GBTC. So it's been a complicated launch with 11 of them, but largely I would say it's successful. BlackRock and Fidelity leading the way, ARK and Bitwise having a lot of success. We're talking already in the billions of dollars after 2 weeks. It's pretty good. So now I got to work on my Vanguard primer. I've got to do this ETF survey we did, and we're starting to phase out a bit from it, but it still is going to be probably like one of the biggest stories of the year as we roll into, the spring and summer for sure.
So one thing we haven't done is talk to a financial advisor about any of this. Who'd you bring today?
Yeah, I thought we just all issuers, and I've been going out on media when this was coming up, and I've been saying that a target market of this launch is the advisor world. And advisors manage $30 trillion. I mean, they control all of the boomer money in America pretty much. And that's largely who these ETFs are aimed at. And advisors love ETFs. They trust them. They like the low fees. And so we should talk to somebody who actually uses them or doesn't use them and has to sort through which one to pick. And the guy we have with us is Douglas Boneparth. And he is a Twitter celebrity, I think, an ex-celebrity. Twitter sounds better still. I got to be honest. Okay. He's a Twitter celebrity. If you haven't followed him, his self-deprecating tweets are really funny. Like he's a human on Twitter, and it's nice. And he's a good advisor. He's part of what I would call the big long advisors. These are advisors who are the opposite of the big short people. They don't see bubbles and everything, but rather they see the optimism in everything, and they're trying to get their clients just to hang in there so the magic of compounding can kick in. So in my opinion, they're part of the sort of new generation of just hang in there, keep costs low, let the magic happen advisors.
Okay. Joining us this time, Douglas Boneparth. He's the president and founder of Bone Fide Wealth. This time on Trillions, a little Bitcoin in that portfolio? Douglas, welcome to Trillions.
Happy to be here.
Okay, so I want to talk about how you speak with clients, but we want to start with this Bitcoin thing. At what point did you start telling folks now's the time to actually do this? And how is that conversation different today than it was a year ago?
Oh, it's still happening very, very slowly, almost in real time. When those ETFs debuted, I was the first person to place a trade in my own account just to see what this would be like. Do we have discretion on these trades? Do they need to be mark solicited? I noticed that I needed to mark my first trade as unsolicited, and that prompted a call like, hey, what can we do with this? And the answer was, we're having conversations around this. So take that for what it is. I mean, you have wirehouses, you have broker-dealers, you have everybody starting to develop their policy around this. And I don't think anyone really did anything until it actually debuted. The skepticism that was out there, why move resources around or have these conversations until we know we can actually put them inside a brokerage account?
But just explain the solicited, unsolicited. Yeah. Just break down what that means.
Absolutely. So in my world, if you're managing money on behalf of a client, you have three ways that you can go about placing orders. The first one, let's go with discretion. That means the advisor has the ability to place buy or sell orders as they please. They don't need to call the client and say, hey, this is what we're going to do. We have discretion. Makes sense. If not, you have unsolicited versus solicited. Solicited means that the broker or in this case, advisor is going out to their client to say, hey, I think this should be in your account. Can I place this trade? And they would say, yeah, I want that. Versus unsolicited. That's the other way around. Client calls you, hey, buy me 100 shares of Microsoft. That was an unsolicited. So what they're saying, and for the longest time for broker-dealers that would allow there to be something, in this case, grayscale. That was one of the very few options that you would see allowed inside a brokerage account that was compatible. A lot of broker-dealers would say, you can't go out to your client and say, hey, I recommend that you put, let's say, grayscale in your portfolio. They would have to call you and say, I want exposure to Bitcoin, And you would say, okay, well, the only option I have here are these tools, and then you would take that order. Maybe even have to sign some paperwork or do a little bit of disclosure here. And that's a function of the compliance offices who are naturally skittish around cryptocurrencies.
What about having conversations with your clients and, this looks like a pretty risky asset with no real meaningful applications yet. How do you balance that as somebody who's got the, fiduciary responsibilities that you do?
So I think you have a fiduciary responsibility to educate your clients if they're asking about this. And unless you are living under a rock over the last, let's say, 5 to 7 years, and I don't know how your clients weren't asking about crypto or Bitcoin. And I think it's our job to educate them. And most compliance offices, again, are like, hey, don't touch this with a 10-foot pole. I mean, that's a tough spot to be in, right? So here I am wanting to educate, but you might be told, hey, don't talk about this. That's number one. Now comes the product, right? And I think banks and institutions are still trying to figure that out. I'm not going to put myself in the position that I was like, hey, I can't wait for this to come out so we can just start to load portfolios with it. It's probably more the stance of, all right, when this is kosher, right, and we get approval to do what we want to do, let's say have discretion, how can we build models or integrate this into our risk-adjusted portfolio so that we could offer clients, hey, are you educated on this? Is this something you want? We're now offering portfolios that maybe have a 5% allocation. That data is out there. I mean, we got 10 plus years of data on Bitcoin to see, and almost like any brochure from, I remember Grayscale having one. What would happen if you added 1 to up to 5% of Bitcoin on an 80-20 or 60-40 portfolio? Those results were pretty compelling. I mean, there wasn't a single time like, wow, non-correlated, generated alpha. That's because, Bitcoin has had a magnificent 10 years. So you have the public, from not knowing a thing about it, 2013, 14, all the way to everyone and their grandmother knowing about it, Thanksgiving 2017, $20,000. And then, from there on, here we go. We got a lot of rides in there. So everybody knows what this is now. And we're just seeing the broker-dealer investment advisory world get this new shiny object, and we're going to figure out what they're going to do with it. I'm still figuring out what, we can do, how to roll it out, how to package that with a maybe handful of clients that are like, all right, it's go time. And there's a reason for that.
Let's talk about the client. So of all your clients, what % do you think would be interested, or are you planning to maybe allocate one of these Bitcoin ETFs into their portfolio?
Well, and give us a little bit of a primer on like how many clients you have,
right.
How much money you're overseeing.
Yeah, we got over 150 households. We're seeing close to $90 to $100 million in assets and under management. But the thing you need to know about my practice is how young it skews. I'm 39, and I would say the average age of our client is mid to late 30s. And, you said in the beginning, like, boomers love, boomers would love this. And I agree with that because 5 years ago, the number of clients that would have a question, want exposure, or think about having exposure was relatively low. And 4 years from that, I would say 1 in 4 clients would want to know more about it. I mean, it just ballooned the interest in this. My point being here, my clients that have exposure don't need an ETF. All right, they've already figured out how to use Coinbase or have already been indoctrinated in how crypto works. But for the clients that do skew older, yeah, there's been some inbound calls that say, hey, this is out. Can we do something with this?
How do you use ETFs in general in your portfolios?
Yeah, we use ETFs primarily in our portfolios. Our core risk-adjusted model is maybe 6 ETFs from large cap all the way down to, emerging markets and bond funds. We do like to use some active strategies for fixed income.
So let's talk about the older clients who have some inbound calls. I had my mom over last Sunday, Joel, and she saw me talking about Bitcoin ETFs on ETF IQ for like 3 weeks straight. And she's like, someone needs to do a show for me and my friends and talk to us like we're second graders, what this all means. To me, it all just seems like funny money in space. That was her.
Internet space money, yeah, she's close.
But she said, I wouldn't have looked at it before because the SEC said it was bad. Now that these are out, I'd consider it. That alone.
Did you tell her to read Chairman's letter?
I don't recommend. The only thing I recommend to my mom is just try to keep costs low. I don't want to get involved with like pushing my mom and my family members. I don't want. Yeah, I told her what I think. to me, it's a little like, religion to me. It's like I'm going to believe in the mystery a little bit here. I'm not negative, but I'm not all in. But I'm like, I respect it because of how relentless it is and how creative and intelligent some of the people in the space are. Yeah. That is what I think you're kind of betting on. But the older people, when they call you, was the SEC approval and, Larry Fink on Fox talking about it, was that sort of what made them feel comfortable? And when they ask you about it, are they interested in like a little hot sauce, or do they think it's like an alternative to you? Or are any of them really into this like Mad Max potential world where all the societies break down and Bitcoin is the currency that everybody uses?
Like in a gold kind of way, right?
Yeah. See, there's the word you just said it. But no, they don't. So I'm glad you said gold. They don't think the Mad Max, got to build a bomb shelter, doom shelter in the backyard type scenario. I think a few things. I think, look, there's bias that I have. I've been involved in Bitcoin, and having mined it back in 2014. I've written articles about this. I've shared my thoughts and feelings around this, and clients who've been with me for a while know my story. So on one hand, they might think like, oh, Doug likes this, has been doing this, and has been successful in this. Should I follow suit with him? And I urge caution there. Just because I've had success in this and took the risk, long ago, doesn't mean you should, do that. Just don't, monkey see, monkey do kind of thing. But you mentioned gold, right? And I think this is the best way. And I keep it very simple. I believe that there's room for digital gold, an asset class that's digital store of value. Let's just stop right there, right? I think there's space for that. Do you think Bitcoin's half as good, a quarter as good, double as good as gold? Then you can kind of get an idea. Depending on what your belief is, you get an idea of where you think it's going to go. All right. I know gold can be turned into jewelry, right? But when you're fleeing a country, you want to. Yeah. You're going to interrupt me here.
I am, because if you charted Bitcoin and gold, Bitcoin makes gold look like a money market fund.
Yeah.
In terms of the chart.
Sure.
So I thought that Bitcoin for even boomers would be used as a FOMO cure. Like, look, Doug, I don't really care about this. Douglas, sorry.
We're good. It's going to happen.
This might take me a couple tries, Joel. I just know you as Doug. I don't know why. And we don't even know each other that well, but you're Doug to me.
It's Doug.
Okay, Douglas.
It's my fault.
Okay.
I made this hard.
All right, so Douglas, listen, I just don't want to kick myself in 10 years. And let's just put 2%. Don't mess with my 60-40. I like that. That's how I think they think.
Yep.
But
that's right.
The gold argument to me is a little more like, hey, Doug, put some gold in the fund just because I want something that's non-correlated, possible hedge. It's not always a hedge.
No.
But gold to me is much more stable.
Yeah.
It just seems like gold is an alternative and Bitcoin's hot sauce and FOMO cure.
Well, two things can be true, right? They can cure their FOMO and get access to an alternative asset class that's non-correlated. I just compare it to gold because it's the best comp that I got. Sure, you're right. Look at those performance charts. Then again, Bitcoin's only been around 10 years. So comparing a 10-year timeline to gold's ever existence, is kind of a tough comparison. You got technology imbued in this thing, the blockchain. You got a lot. Is Satoshi Nakamoto hiding in a bush around the corner? He's just going to pop out and be like, gotcha. And, boom, everyone's been suckered. Like, it's in the back of everyone's mind. Let's not kid ourselves. But no, I don't think that's the case here. But I think both of those things can be true. I think we can view it as a digital form of store of value. And yeah, that's the joke. Like, store of value, like, look at that chart. How many 80% drawdowns have I lived through? All of them. Like, I think 3 at this point, if not more, and then 50 or 20% drawdowns, unlimited. Is that something, people look to when they say store of value? And the answer is probably no. But do we get to something that's more steady state after we get to indoctrinating or a mass adoption? I don't think we've adopted, to the degree that, gold or, your mainstay asset classes have. Not even close to it.
So now that we actually have legit products that you can, trade on exchanges, how do you go about evaluating those options?
Like which of those 11 we're going to choose from? Well, in our portfolios, we lean heavy on BlackRock. Shout out, guys. I share it. And I'm agnostic. Like if my client wants Vanguard over, BlackRock.
Well, that wouldn't work in this scenario.
Nope, but it would not, Apparently, it's not mature enough of an asset here. But we're talking.
Hold on, just quick background. So what we're referring to is Vanguard has a brokerage platform. And they basically said, we will not let the Bitcoin ETFs trade on here, even though they do allow gold ETFs, Joel. Obviously, Vanguard doesn't love commodities in general because they don't have any actual intrinsic value. But when it comes to gold, at least there's a use, they say. So Vanguard really, and all the crypto people are triggered. They want to they're like, boycott Vanguard is trending. And I'm like, listen, you are not going to take down Vanguard. They get so crazy. Yeah. But I don't know why Vanguard, in my opinion, Vanguard's just trust their clients a little more.
Sure.
But they don't allow leverage either. So it's somewhat on brand. Vanguard's like a family-friendly audience kind of thing.
I get it. I mean, I made a joke at their expense because everybody was, let's be honest. They got memed by me. But, that is the point. Like, at least they don't offer those triple leveraged, or triple long, triple short, or whatever, type of risky stuff. So that remains on brand for them. I could see it. And the Bitcoiners would be like, long term, this is a terrible move. Well, if their clients aren't demanding it, and first of all, their clients can, buy this in another brokerage account. I mean, the sensitivity around, Bitcoin maximalists is super high, and I don't fancy myself.
It's also, isn't there some irony in them getting pissed off about Vanguard? Because, hey, we're supposed to be outside of the system. It's a currency outside of the system. And now we're pissed off that someone literally the largest asset manager in the United States won't accept us. Isn't there a inconsistency there?
Well, there's irony that BlackRock has the biggest one, and they're the second biggest, or first biggest to pick, the day of the week. It just shows you how new this all is and how people are figuring it all out. I'm not sure. There's a lot of smart minds at these institutions. But the thing about Bitcoin and crypto is, you said it, how many smart minds are now existing outside of this? If you're a Bitcoin maximalist, you're probably pissed off an ETF exists in the first place. That is not the spirit of what a decentralized currency called Bitcoin is supposed to be. I mean, it literally was forged in the Occupy Wall Street days. Fight the banks.
Yeah, it seems like back, I don't know, 20 years ago when rock bands started selling their songs to commercials, you saw a Led Zeppelin song on a Ford truck, and it pissed people off.
Yeah.
It's the same vibe, it's but I think, there's also the number go up.
Mm-hmm.
It's helpful for that. So sometimes there's pure number go up people, but then there's more I'm in it for the religion. And I can see, and then some people have both inside of them. And there's
we're so tribal. Yeah. We're so tribal in everything now. You either are a maximalist or you're a Wall Street suit. And I'm wearing a suit today. And I'm an OG Bitcoin guy.
Yeah.
But not a maximalist.
They call me a suit and a boomer. And I'm Gen X, and I rarely wear suits, only on the TV show.
And it's our gray hair. They're calling me a boomer now. So.
Well, my kid calls anybody over the age of 17 a boomer.
100%.
Yeah.
So back to nuts and bolts of how you actually bring this into a portfolio for clients. What is this displacing in your client's portfolio?
It's replacing large cap equities and developed international. So if you wanted a 5% allocation, the first trade we made unsolicited, boomer client calling up, I want 5% exposure in my 60-40 portfolio. Literally that.
So that happened.
That happened.
Nice.
That happened, and I saw that.
Did they request the actual ticker too, or just you pick it?
I guided them through what we're thinking, and Bitwise was a firm that actually broke away from our bias towards iShares. I like what Bitwise was doing. I think their CEO is fantastic. I think they're competing very nicely on fees, and I love the fact that they're giving money to developers as well. Great story there.
Mm-hmm.
And that was the trade, and we put that in the portfolio. 3% came out of IVV, and 2% came out of IEFA.
Wow, this is fascinating stuff.
Went from super safe to just full on.
Yeah, but 5%,
Mm-hmm. Yeah.
On an alt. Also in a portfolio that doesn't have alts.
Mm-hmm.
I mean, really? Is that big? Is that a big deal?
Two things on this, adding a couple things. 60-40, everybody loves it.
Love it.
That said, I have to explain to crypto people why people love it. They're like, why would you even use stocks and bonds? I'm like, are you kidding me? Anyway, they're all in. They can't even understand a 60-40. But for a normal person, a 60-40 low-cost Vanguardian style portfolio, in my opinion, is actually super beneficial for the behavioral stomach you need for a product like this, because Bitcoin goes up, down a lot. Let's say it goes down 50% in a year. You don't need to panic that much because it's not your core. It's not what your whole thing is on.
Yeah, that was 2.5% drag right there.
Whereas back in the day, you would buy a hot portfolio manager, and then when they started going down, you'd panic because that's your kids' college money, and you'd jump into the next one, and the behavior would be awful. Now, I think Vanguard really helps solve behavior, not only for the 60-40, because they never leave there, but for the hot sauce too. It's way easier to behave when you've got that really good deal and you're secure in it. So in a way, I think the 60-40 helps hang in there for an older investor. These crypto people, they're going to hang in regardless.
Yeah.
But for the older people, just seems like the 60-40 helps.
You're taking it out of equities, not their fixed income position. Okay. So you could have been more extreme, I guess, with your 5% take into a Bitcoin ETF. You could have taken out of intermediate or long duration bonds and been like, hey, we're going from the soft stuff to the hard stuff real quick here, right? But like, your two biggest positions on the equity side in a 60-40 or 80-20 is the international piece and most of all the large cap equity piece.
But is that a conversation that the fact that these are now ETFs enabled, right? Because you wouldn't have had this same conversation with this investor if they if you hadn't have had ETFs.
Hold the phone. There's a thin line there, right? Like, again, stressing the word education, right? So I fortunately had the knowledge base and the experience in my own dealings with Bitcoin and being an early adopter to provide a level of education to my clients. You have, in my mind, that duty to explain how things. If a client calls you up and wants to know about something that you know about, you're not out there saying, yeah, you gotta sell 10% of your portfolio right now and open a Coinbase account, get that money over there and buy some Bitcoin. I mean, that's not a good day from a compliance standpoint. That puts you in hot water. But when clients are saying, how do I do this? I'm going to do this, and I don't want to mess it up. And you have the ability to educate them on how to do it. You do it. That's your job. You build value that way, even if it comes at the expense of your own portfolios that you're managing for your client. So that interesting line of, oh man, I love Bitcoin, let's get the clients in it, to let me make sure you know what you're doing. Let me make sure you understand everything there is to know about this and the risk you're taking. We can go deeper than that. Let's understand what this risk means to your financial planning. Because I'm not sitting here as an investment advisor extraordinaire. I'm sitting here as a financial planner extraordinaire. We lead all our relationships and conversations with financial planning, not the investment management piece. This almost comes last.
Now, in terms of advisors, I know there's sensitivity to not wanting to have a nasty phone call from a client down the road. So I think, we used to have this phrase like iShares and Vanguard ETFs are like the new IBM. You can't get fired for buying IBM. This is in the 80s. You can't really get fired for buying a Vanguard and BlackRock ETF.
I guess I am a boomer for now.
But that generally applied to stocks and bonds, right?
Yeah.
And low cost. Do you worry at all that, let's say there's some, a black swan event with crypto, another FTX, it goes down. How worried are you that you're going to get the angry phone call? Or do you have that deep of a conversation with beforehand that you almost eliminate that?
Twofold. You have that conversation. I think you make it very clear what those drawdowns have looked like. And I bring my own experience into that. Mining Bitcoin when it was 400, seeing it go to 20,000, down to 3, up to 59, 69,000, down to 20 or 17, and now we're 42 today. Oh my God. I'm playing with house money. Yeah, I'm playing with house money.
Hold on, though. In your portfolio, though, I'm assuming you have a 60-40 base, something like that?
For me, it's 80-20. So for the younger clients, just crank up that 60-40 to 80-20.
Let me ask you this. Let's say you were all in on crypto. Could you have stomached that?
No.
Okay. So no. Do you sort of explain to them, look, we're only going to put a little in here, you'll live?
I don't believe in concentrate. Yeah, outside of your mainstay ETFs like IVV or S&P 500 and, what's part of the portfolios. We have conversations around clients like, what do you do with concentration risk of your own company's stock? Clients that work at Netflix or Amazon or your Fangs or Fancy 7, whatever, Magnificent 7, whatever it's called. Fancy 7, Fancy 5.
I like Super 7. He likes 7. Magnificent 7.
I don't like any of it, to be honest. But what do you do for, your Roku client who, got a grant and 40% of their net worth is made up of, RSUs that have vested? I'm not a fan of that. I kind of draw a hard line at 20%. I don't like seeing more than 20% of any asset outside of your home, being in your portfolio, unless it's the S&P 500 or, your international developed core fund.
And the older investors who come to you and want this exposure, how do they hear about it? Was it reading about the Bitcoin ETF launch? Was it knowing about it from maybe their kids? Or what triggered them that they should maybe now call you?
All of the above. I mean, again, if you've been a client of mine for a long time, you know my story with it. I've written about it, my experience, my journey, what it means. I mean, I remember in 2017 writing a piece for mainstream financial media titled One Financial Advisor's Bitcoin Journey. I mean, I didn't know of any other financial advisors who, bought a Bitcoin miner with their buddy in 2013, did this and held the entire time. I forgot about it. And then then I remember friends calling me up and be like, hey, don't you have this stuff? Congratulating me. I'm just like, it's weird. Should I get some? I can't talk about that. Not enough to retire, but and you brought up an interesting point, Joel, that how do I deal with it? This is an outsized position, and I'll get a little personal here. We got lucky. My wife and I made a really interesting decision back when we had no money to go on a little adventure with a friend, and we paid $3,000 for a Bitcoin miner to get some of the space money out of the internet.
Internet space money.
Internet space
funny money in space.
Mm-hmm. So I won't reveal how much that is, obviously, but it turns into something that compare that to our 401k or retirement savings.
Sure.
I mean, how do you think about that is an interesting question.
How much of the performance made you a believer versus the story?
Because that's a great question.
You know what I mean?
Seeing that I've held with it, going from multiple six figures back down to five figures, if not lower, I believe in it. I can tell you that without there's conviction.
Okay.
I have conviction. More than I am price go up. This is great for my pocket. But you'd be crazy to think that I'm going to sit here before you and not say, yay, price go up, which is kind of the interesting position I find myself in. We talked about tribes. You're either, Bitcoin maximalist or Wall Street, shark, fat cat.
Suit.
I'm both. I'm both. I want price up. Let's get that. Let's get the ETF. Let's get the halvening. Let's get this, supply shock. Let's get this demand from the ETF. Let's watch number go up. I'd like to retire, earlier. You're kidding yourself. But at the same time, you go back, take a look at the technology and what this can provide people. I take a page from the maximalist playbook. You love to see it. You do love to see it. Two things I don't think DeFi can exist without traditional finance. I think it's a symbiotic relationship. So if you're trying to go one or the other, you want the people calling for the end of traditional finance and the fad, and then what are you gonna do? Climb to the top of Garbage Mountain to get a cell phone signal so you can send someone Bitcoin? It doesn't work like that. You can't have the end of the world and Bitcoin.
Okay, so you're out there looking at the internet, you're watching stuff, and you've got Jamie Dimon on one hand, Pet Rock. Then you got Larry Fink out there literally telling a reporter,
wild.
Well, if you don't trust your government. And that's sort of him totally orange-pilled, explaining it from the mindset of a total maximalist. And it's making heads explode on both sides.
My head explodes hearing these guys.
These are very influential people to advisors and boomers, of course. How do you square that? Do they ever come to you and say, is Jamie Dimon more right than Larry Fink? What's going on here?
I don't know if my clients are getting into, CEO, financial institution CEO, battles and what they're saying there. Few and far between. I guess my clients who work in finance, can have an intelligent conversation with me or bring it up. But I'll agree with you that it's pretty wild to see the dichotomy between Larry and Jamie. What are their incentives is the first question that I have. Well, Larry has an ETF, the more flows into that bad boy, the better for BlackRock. I mean, it's pretty simple. I get that. That part I get. Larry's easy to understand. Going out there and saying, if you don't trust your government, I mean, it's factual. If you don't trust your government, by the way, then you want to go buy Bitcoin itself and stick it on a ledger, right? you don't.
Larry Fink's your answer there.
Larry,
it's fascinating.
Yeah, Larry, way to take a page out of the maximalist or the real Bitcoiner playbook here, but it's not going to be in your product if that's the case.
One question I get a lot from the crypto people on Twitter is, why just not have your own wallet? So as an advisor, can you explain why not just do your own cold storage?
Yes. This, I think, is the biggest point of all of it, and crazy that I didn't get here, and I'm glad you brought it up. People, I think Bitcoiners and crypto fanboys and girls underestimate how lazy people are.
Sure.
Guys, what did we learn I did the whole NFT thing as well. And let's go there for one quick second. I remember my wife was like, what are you doing? I'm like, I'm checking out the hype around these NFTs. You had to get money onto an exchange to buy Ethereum. I know we're moving away from Bitcoin here. To buy Ethereum, to get it to a MetaMask wallet, to go buy a pixelated frog on, OpenSea, to then, show it to your friends on your phone. I said, honey, let's see if you can figure this out. I want you to go buy a Boss Beauty or whatever she was into. And, over her shoulder, she turned, after doing it all, she turned around and looked at me and said, there's not a single friend that I have that would ever in their mind do what I just did to make this happen. And that's probably the most complex series of transactions. Now scale it down to just opening an account on Coinbase, getting money from your bank account to Coinbase, and placing an order for the first time on a trustless system. Guys, people don't want to do that. They just don't want to do that.
Yeah. They want to outsource it.
Yeah, they don't want to do it. What do they know? I love blockchain technology. I love Web3. It is not easy to get involved unless you have a high degree of acumen when it comes to technology and these types of things. That's such a small piece, of the population. But what can most people do? Log into their brokerage account and place a trade for an ETF. Super easy. People love that. They love that, and that's why this product exists, so people can do that, and for institutions to make money.
Are you ready for the moment that there's going to be potentially more ETFs and more crypto products on regular, normal exchanges, or are you going to kind of just draw the line at the Bitcoin stuff, or are you going to try and...
There should be Bitcoin and Ethereum. I think, your two
and that's where you kind of draw it?
Yeah. I can't quite go there. I don't know enough about others. If you're a Cardano person or a Ripple person or Litecoin's your thing, or you're can you imagine, hey honey, I bought some Dogecoin, ETF today. Oh great, our allocation looks wonderful. I don't know. No, love you Dogecoin people. I hope everyone makes money. I truly do. I'm a good guy here. It doesn't work like that. But yeah, I think you'll see Ethereum next. I think there's some real use cases that will pop up there. I think, NFTs weren't it as far as showing the world that proof of work and, digital signatures on, stuff is going to be very powerful.
So we've got these newborn 9 ETFs and GBTC. GBTC's bleeding, the newborn 9 taking in money. Let's just say over the next couple months, they even out at about 25-30 billion. Now, we'll call that the starting line because all that unlock will be done and we'll be ready to start just inflows mostly. Where do you see this going? How big does this get? Just for context, gold ETFs have $100 billion. That's 1% of all ETF assets. So let's say we're at 30 billion in the summer. Where do you see this in 5-10 years? You think it'll bypass gold, be about gold, or less than gold?
Slightly past gold.
Okay.
I think my conservative case is it's as good as gold. My aggressive case is it's multiples better than gold, but not 100 times better than gold. Come on, let's be easy with that. So what's the market cap of gold? 10 trillion?
10 trillion. So, gold. Also interesting.
Going outside the ETFs now. Just going the whole.
So if you go more than gold, we'll say 150 billion. That would put it at 2% of all ETF assets, which is, again, that's healthy.
It's an aggressive. That's my more aggressive case.
The also interesting thing is just one more future. Gold ETFs only own 1.5% of the gold above ground, something like that.
Yeah.
Gold ETFs, Bitcoin ETFs already own 4% of Bitcoin. If you go to Goldian levels, you get to 10, 15, 20%
of all Bitcoin.
It's interesting. What do you make of that? Is it possible the ETFs eat up the market a little too much, and then there's a lot more volatility because there's less actual traders?
I'll put my tinfoil hat on here and say, you got institutions getting involved. They're gobbling. What was it this morning? What does BlackRock have in 50,000 Bitcoin supporting their ETF right now. I mean, you put enough Bitcoin in the hands of institutions. I mean, take a look at the gold ETF and what happened, in the years leading up that. Can they manipulate? Can they move? Can they shift their weight around? Can they body some things? And I think the answer is yeah. But look at who's selling their Bitcoin out of Bitcoin holders. Guys like me are not, going to touch this forever. And that supply is going to be eventually. I think it's going to get hard to tap.
We've managed to go almost full Bitcoin in this segment, so I want to bring it back. Imagine a client comes to you and says, do not use the word Bitcoin or crypto in the conversation with me. What are you going to have? What kind of conversation are you going to have with them about what's happening in the world and markets and portfolio construction?
I mean, that's 99% of my conversations right now. It's like Bitcoin and crypto is not being used here. Again, it's a lot of self-selection. You got clients who have already come in. It's a younger base. They're informed. I don't have to, they've already educated themselves, or we've had the conversation around what this is and what they should do.
So your answer is go find a different financial advisor?
No. If they don't want to talk about it, we're not going to talk about it. I'm not here to put any product down any client's throat at any time. I think if I start doing that, regardless of the product, I'm not doing my job.
Do you get clients who get jealous of the Qs? Let's say they hold S&P 500 and the Qs are like double.
Yeah.
Do they ever go, hey, why aren't we buy that instead?
No, that also doesn't come up. The beautiful part of leading with financial planning is that you give people an understanding of how they get to their goals, what rates of return they need, the levels of risk that they're going to take to achieve those rates of return, and then they get back to their very busy lives. All right. We love talking about this. Go talk to your friends who don't work in finance, who have, a couple kids, maybe 3 kids, and go try and have the level of conversation, even a fraction of the level of conversation. Not going to happen. You're going to talk about football. You're going to talk about the kids and their school or whatever. It's just not going to happen. Boomers, however, they got a lot of time on their hands, especially if they're retired.
Yeah.
So maybe you'll get a few more inquiries from them around this ETF. But for my clients, they know where I stand. They're pretty savvy. I think they've already, the ones I expect to have exposure already have exposure, which is interesting.
Final question. What is your favorite ETF ticker?
Ooh. Right now it's QQQ. Oh, you mean what's my favorite
novelty.
Novelty ticker.
Yeah, forget investment.
Yeah. I understood that.
But also a tell. I like the Q's answer.
As far as what's hot, that. Yeah. But as far as what's my favorite,
people love ETF tickers, so we just try to end on a sort of.
Oh God, I don't care. But for a vanity plate. Wasn't there Nerd out there?
Yeah.
Yeah.
That's good.
That was a good one.
Look at you.
I'm a nerd.
That was one of the best answers.
Yeah.
That's a video game ETF, Joel, that is now defunct.
Yeah.
I think.
Oh, that's whether it is or it isn't. That one was cool. I saw some hats with Nerd on it.
By the way, did you notice that there's only 2 ETFs and Bitcoin ETFs that have Q tickers, HODL and BRRR?
Yes, smart.
The rest, I thought, were sober on purpose because you could have fun with tickers here, but I thought they were sober. Fidelity, BlackRock, because they want to.
That's a hedge against this goes awry, and they even named it Burr, HODL.
Or also, the Bitcoin's crazy enough.
Yeah,
you don't need to add the ticker on top.
I mean, have you met BlackRock's compliance department? How many lawyers are there? Yeah,
did you see the videos and the way they're presenting it? It's so fascinating showing BlackRock marketing.
Yeah.
To the crypto crowd.
Yeah.
They're like, oh my God, this makes me want to fall asleep. But they're like, hey, wait, guys. This is how you talk to old people. And it's just funny them talking amongst themselves about these older people getting into their business. And it's such a clash of cultures. I find it endlessly fascinating.
I went to a BlackRock influencer day. They got a bunch of Twitter accounts and TikTok accounts us all together. They were debuting their lifestyle target date ETFs. Invited us all down to the exchange, do a bell ceremony, and I remember I'm now in BlackRock's new headquarters, and everybody we're months out from, this was maybe a couple months ago, and all I wanted to ask people was about the Bitcoin ETF. Dude, it was lock and key. We will not talk about that. Almost with I could almost sense the smirk behind it, because they someone knew it was coming, and it came.
Douglas Boneparth, thanks for joining us in Trillions.
Thank you for having me.
Thanks for listening to Trillions. Until next time, you can find us on the Bloomberg Terminal, Bloomberg.com, Apple Podcasts, Spotify, or wherever else you'd like to listen. We'd love to hear from you. We're on Twitter. I'm at Joel Weber Show. He's at Eric Balchunas. This episode of Trillions was produced by Magnus Hendrickson. Bye.